So single family rentals has become the latest food group in commercial real estate, right? It's been around since the pilgrims landed renting houses, but yet um, office and retail and industrial and shopping center and hospitality, these were all the food groups in commercial real estate that had been consolidated. A lot of institutional capital got into that business. A lot of experienced syndicators built, substantial portfolios. But over here, there was this sort of kissing cousin asset class of single family that largely because realtors don't see houses as investments. Realtors see houses as something that you live in, that you own. It's an owner-occupied industry. So the industry that would have been the one to professionalize the asset class just didn't do it. So it took a housing crisis, and that housing crisis drew a lot of attention. And then Wall Street finally got involved. That's been our clientele for 9-10 years. When they got involved, we had to very rapidly figure out how to use the data and the technology and sort of inflict professional management systems in. But what we find the most interesting is that multifamily and single family are basically the same but different, right? It's housing in America. The tenants live there. It's a different type of tenant, different phase in their life very often, but really it's the same thing. And where decent operators can pull out a 60% NOI in multifamily, they can with single family also. So the management is more complicated because they're spread around. But on the other hand, the tenants stay longer and it tends to even itself out. But here's the thing that I find the most fascinating is that back in the 1980s, you had government deregulation that caused banks to do some risky things with lending. And then what sometimes happens after risky lending is that you had a turnaround and the market crashed and you had a lot of distressed property. And then what happened is that distressed property trend was a dinner bell to a lot of capital that came into the space. This is all back in the late 80s and early 90s, right? So deregulation, good job, government, crazy lending, bad lending decisions, distressed property, Wall Street capital comes in, and then Wall Street capital says, you know what? All these multifamily apartment buildings that we bought, we like this. It generates a good yield. We understand the operations now. Let's stay here. Okay. And then now 20 years later, more than half of all the multifamily in this country is owned by institutional capital. Okay. So if I can sort of mime out a bar chart here, $3.6 trillion worth of multifamily assets in this country, more than half of it, about 55% of it is institution owned. 3.1 trillion of single family rental, not single family home ownership. Okay. But single family rental, people living in a house that they rent, is the $3.1 trillion asset class, which is comparable to the $3.6 trillion in multifamily. But less than 2% of single family is institution owned. So it was the same thing though. Deregulation in the 2000s led to bad lending practices, led to a lot of speculation, led to a market crash, led to Wall Street dinner bell. Capital came in for a trade, decided to like what they saw, decided to stay permanently. And so for syndicators that are coming into the space now, there is a food chain now. There's a gravitational pull by these big players that if you're somebody that syndicates 1 million, 5 million, 25 million, 100 million, you're still just one of the fish in that food chain. And the presence of a big whale on the end of the food chain is really good because you know that as big as you get, there's a place to serve that up later, recycle your capital, do it all over again.
Wow. No, I appreciate you laying all that out. I just went right through the timeline. So, I guess elaborate on, people that are, what should I be considering or syndicators that are looking at, oh, wait a minute, Greg, should I be considering, a portfolio of single family homes and why, as opposed to just sticking to the common, commercial space or commercial properties, the typical commercial, why would I consider something like this?
I think the first answer, and I'm giving this answer not because I'm thinking it up now, but because we have a lot of clients that are syndicators. And the reason many of them have gotten into single family for the first time is because they wanted a new story to tell. They had a choice. They could either make a whole new set of contacts and tell their old story to new contacts or bring a new story to their existing contacts. Okay. So as an example, I'm guessing that a lot of your viewers are multifamily, right? That's one of the more popular syndication food groups out there. And what we're seeing is a lot of multifamily investors are beginning to see single family as that kissing cousin. And something really interesting is happening. That is that I saw some executives at a conference who are multifamily executives who were talking about that the cost of acquiring a tenant is so great and it just stinks to have them leave after a year. All right. And they're starting to think about accumulating. This is a guy whose company has 2,000 or 3,000 doors of multifamily in Tampa, and he's buying a couple of hundred single family around that in Tampa because he's got infrastructure for operations. He knows the market. He wants to go deeper in the market, and he wants to hang on to that tenant because some of the tenants move out because they had a kid. It's not because they didn't like the building. It's because they had a kid. So here's a way to take your tenant and hang on to him for 5 years instead of one, do it all in the same market. So I think the short answer, which I'm never good at, by the way, so sorry about that. But the short answer is that it's a new sexy object. It's a shiny object. It's something that not very many people know. And we're seeing a lot of interest among capital sources that say, hey, we'd like to get into single family. They're looking around for folks that have good plans and some experience, or at least a good strategy to go with. So it's a new open door.